What's up, everybody? Welcome to the very first ever Intro to Stocks Bootcamp. Thank you, everyone, for joining us today. Really appreciate everyone for hopping on. This is a major deal for us. This is 3 months of preparation coming down the pike, and now here we are. So this is the day that we have been waiting for. Again, welcome, everybody, to this bootcamp. My name is Logan Beach. I am one of the head educators here at Learning Curve. We'll kind of get into what is Learning Curve here in a second. But for me personally, I have been always interested in the stock market. I was 12 years old when I first started trading in the stock market, and since then I've moved to penny stocks. I've dabbled in options. I've done various different things. Have done very well for myself in the stock market arena. So I am excited to be able to bring that knowledge to this boot camp, and hopefully you guys will benefit from that. And man, really cannot wait to share this information with you guys. So without further ado, let's talk about what is Learning Curve, right? So Learning Curve is it's a financial education company that me and my really good buddy, Talon Litzy, he is not going to be on with us today. Potentially tomorrow he will be with us. But we started this company to educate people, not only just about stocks, but about Forex, about investments, about financial literacy, all of this good stuff. So this is what we do. This is what we love doing. We love getting on here and educating people. We have a website with courses, with training courses, with a ton of information, things that we are doing and hope to keep doing. If you want to check that out, that is learningcurveltp.com. Feel free to go on there. We've got a bunch of stuff. You can make a free account. Once you do that, you can even join our Facebook community that we are dropping information in quite frequently. So we hope that you guys will go ahead and join that, as this is where basically we drop more knowledge that we don't necessarily cover on a call, right? So there's that, and just, feel free if you want to join, feel free to do so. Again, the website to check out more information is learningcurveltp.com. All right, so let's get to the introduction stuff, right? So again, this is a 2-day free boot camp that we're going to be talking about stocks, anything and everything stocks, okay? So with that being said, we're going to be breaking this up into sections so that you guys can easily digest exactly what's going on, and it's not, a lot of information to take. You can kind of take notes and break it up, and we'll do it that way. After each section, and you'll see, we will denote the sections. We'll have a short time for questions and answers, okay? If you have any questions throughout this call, feel free to write that in the comment section. We are able to see that, and then before we move on to the next session, we will go ahead and answer those questions, and then we can go from there and address that right then and there. That way you have your questions answered, because if you're like me, when I'm taking notes, I like to write questions out to the side, and then if I can get those questions answered, I love to write the responses below it. That way I can keep track of my thoughts throughout the entire, whatever I'm listening to, whether that's a call or a lecture or anything like that. So that's how we're going to operate this, right? So again, I'm gonna mention this a lot. Please, if you haven't done so already, go get a notebook and a pen, something to write some stuff down, because a lot of this stuff is very useful. And we're really going to be moving through some things, hopefully not too quickly, but we're going to keep moving through at a decent pace so that we can get through the information. Because obviously I don't want to take up too much of your day. I don't want to take hours on end, but I do want to provide you with the information that you need in order to be successful, right? So without further ado, let's get to our first topic. So the first thing you're wondering, why you're even here, right? You're here to learn about stocks. So let's talk about what is a stock. So different people have different opinions on what a stock is, but this is the actual definition. A stock is a share that a company issues that gives us as investors the ability to own equity in their company. So most companies, instead of going and taking out a loan from a bank, they will issue what they call equity shares, which means you actually become a part owner of that company. Now, as the company does well, the stock goes up. As the company, if it doesn't do well, it goes down. That's why we have fluctuating prices with the stocks. And obviously, there's a couple more things that go into that, and we will talk about that later on. But for all intents and purposes right now, what I want you to know is that these shares, they give us as investors the ability to be able to invest in a company. Okay, so that's just the very first thing. So these shares, okay, the ones that they issue out, they help fund projects with companies. So some companies, if they want to develop a new product, they will go ahead and issue shares, and people will buy those shares, and that will get them their money instead of taking out a loan. Okay. Typically, loans have interest attached to them. So for a large company, or even sometimes a small company, it doesn't make sense for them to to get a loan because there's a lot of interest attached to that. So they decide, well, we'll just issue shares. Okay. And it helps out with their company. It helps you. It's kind of a win-win situation. So, and like I said, stock prices can be fluctuated, right? Whether or not the company's doing good or bad. We need to make sure that when we are investing in a company, okay, that we are investing in a company that makes sense. And we will talk about this more in depth, but don't just go and take your money and invest it in just a bunch of random companies. Have a purpose for everything that you invest in. Have a reason why you are why you're investing in that company. Don't just blindly go into it. Okay. I've known a lot of people in the past that blindly go into it, and it's a problem. So something that we have to note as investors is that these shares that a company issues, they can actually be bought back. Okay. It is very expensive for a company to do that. So you don't typically see a company buying back shares. You will hear several times throughout this boot camp, you will hear the term a reverse split or a split. Okay, that is when a stock goes from one share to two shares, and likewise, a stock can go from two shares to one share. Okay, so you can own one share of, let's just say, Walmart. You can own one Walmart share, and then the next day wake up and there will be two Walmart shares, and you didn't buy that other one. Well, that's a split. And then a reverse split is basically the reverse. Okay, if Walmart has a reverse split, basically those two shares become one share, and naturally that will also make that one share more expensive. Okay, so just keep that in mind. They can be bought back. They usually don't do that, but please, please, please make sure that you are aware of that, all right? Because, again, we want to invest in a company that makes sense for us, and we want to make sure that we get into companies that do make sense. So let's move into our questions and any questions that we have. And we actually have one from Maggie, and she says, what types of businesses do you recommend investing in? So we will actually get into that in a little bit. I don't want to jump the gun too far ahead of time, but there are several industries that I will recommend later on, and you'll see that. But for now, we will leave that question unanswered, and we will circle back to that. Okay, so that is, I guess, our first section. Okay, so here's our second one. Now that we've talked about what is a stock, so what is the stock market? And, for some people that kind of seems like an oxymoron of, well, obviously the stock market is just where they sell stocks. Well, it's a little bit more complicated than that, because like you, if you're thinking like that, I was also in that same boat several years ago. I always thought that it was just pretty simple, that there was just a stock market and that is what it is. Well, that's not always the case. Okay. So there's actually several different stock markets. Okay. You have the New York Stock Exchange, that is the biggest stock market. And then you have the NASDAQ. The NASDAQ is very large, but not as large as the New York Stock Exchange. Actually, the NASDAQ is traded on the New York Stock Exchange. So that's kind of interesting, and we'll talk about that later on as well. Then you have the Tokyo Stock Exchange, the Shanghai Stock Exchange, the Hong Kong Stock Exchange, and then the London Stock Exchange. Now, these are major markets. And the reason why you see a lot of Asian exchanges is because there's a lot of companies within that. And, most of the companies will go ahead and list themselves in the New York Stock Exchange, but some won't because they just don't qualify. Now, each of these exchanges do have qualifying factors. You have to meet certain regulations. You have to meet certain requirements. And if you don't meet those requirements, well, they just will not list you, which means you cannot sell your share in that space. Okay. So typically they will go and find another exchange. And just because a company is in the United States does not mean that that automatically qualifies them to go and be traded in the New York Stock Exchange. They may not qualify to be there. They may have to go and list themselves in another exchange. So be mindful of that. Again, as you're looking into businesses, look and see where they're listed, because different exchanges have different rates of which you can buy or commissions, or sometimes they'll have a limit of the quantity of shares that you have to buy. So just be mindful that when you are searching for businesses to invest in, that you look at where they are listed. And typically when you are there looking at the actual shares in the company, it will tell you where they're listed. Okay. So be aware of that. But for the most part, Robinhood, TD Ameritrade, Fidelity, all those guys typically trade on the NASDAQ or the New York Stock Exchange, because this is where a large majority of these companies list their shares. Okay, a very large majority. Now, there's a couple other smaller exchanges that I didn't mention, but for all intents and purposes, again, this is an introduction to stock market, to what it is. So I'm not concerned with you guys learning all of the ins and outs right now. I'm trying to give you the introductory. If you don't know what they are, how do I get involved? What is it? That way I'm confident in it. And then we will have here shortly another boot camp that kind of follows this up, that is more of an advanced boot camp, and we'll go through that. So again, most companies that you find, they will be trading on the New York Stock Exchange or the NASDAQ. Okay. Again, companies do have the option to choose which market they would like, but typically they like to go to the NASDAQ or the New York Stock Exchange. So sometimes you'll see a company go through and really try to list themselves there. So they will change their complete structure and model of a company in order to get to that point where they can be listed there. And if a company does that, that to me is a red flag. So you want to be sure that you are cautious if you start seeing a company try and meet certain expectations that would not necessarily fit their business model, or trying to get into another market that doesn't necessarily fit with them. You need to make sure that you definitely take a step back and look and see what they're trying to do, where they're listed. And maybe, some companies will put their business plans out there. So be sure to check that as well. So with that being said, we're going to stop here. Any questions, comments, feel free to write that in there. I know that this is a lot just within this first couple minutes. But again, what I'm trying to get you guys to see and do is not necessarily I don't want you to know everything right off the bat. I want you to take a small bit of information and be extremely knowledgeable in that, and then move forward. And that's how we're going to be able to create, and you will be able to create for yourself a stronger trading plan, and ultimately that leads you to be more profitable. So I don't see any questions, so we will move on to the next section. So the next one, and this kind of goes back to the question that we had before about where to invest, but what kind of stocks are there? So again, stocks are basically shares of a company. So and there's really four major types of stocks that we as traders universally agree with. So I'll go ahead and list that for you now. The big one is the blue chips. Not all of your apps will tell you what kind of stock they are. You typically are going to have to do some research, or you'll have to Google what stock this is. Is this so-and-so company a blue chip stock? There's no real good way for a brokerage to say this is X, Y, and Z. Okay. So there's four major ones. Like I said, the first one is the blue chip. This means that they have a long history and a good foundation. You want to invest in these guys. Okay. This means they're not going anywhere. They're not going to try and declare for bankruptcy. They're not trying to get some money and run. These are good companies with successful history. You want to be involved with that, right? Then you have growth stocks. Growth stocks are typically your up and coming companies. At one point in time, Tesla was a growth stock. And actually, for most people, most economists and traders, it actually still is a growth stock because they're not done growing and they don't necessarily have a very long history, right? So that would be a growth stock. A speculative stock. This is something that I personally like, because you may be able to find something that makes you a lot of money. But these are typically stocks that don't necessarily have a huge following behind them, or they're very niche. Their market is very niche. Okay. So basically, if you are looking at a car company that runs on, let's just say, atomic gas. Okay. I'm not saying that's the case, but that is a very small market, and that company is operating within that very small market. Okay. That would be what we would consider a speculative stock. Those are not necessarily bad. You do need to be careful because sometimes there are stocks or companies that are listed as a speculative stock. And I personally would not want to get involved with them because they do not have any history at all, any record that they are actually going to do what they say that they're going to do. So I personally would not, be careful with the speculative stocks. Do your research with those. And then the last one is called a range bound stock. Okay. And these stocks are more or less stable in their pricing, and they don't really move too much over time. Sometimes people will refer to these as penny stocks. Range bound stocks will be referred to as penny stocks. That is an accurate assumption, or even a classification for those. I specifically have done very well with penny stocks, but you have to do a lot of research. You definitely have to do a lot of research, and you need to be able to make sure that you are going into this investment knowing that you could lose X amount of dollars, or be sure that you're willing to lose X amount of dollars. Don't think that just because you invest in a penny stock, it's bound to go up. That's not the case. Okay. So, and while we're on the subject of penny stocks, let's actually go ahead and define that. So a penny stock is anything that is 0.01 to $5. Okay. So if it is 1 cent to $5, that is considered a penny stock. Now, you may be surprised to hear this. There are things called sub penny stocks, meaning that they are less than a penny. And yes, there are stocks that are less than a penny. I have done well on some of those, but you have to do your research. A lot of people don't do research into those, and they just believe that it's going to go up. So they buy $100 worth and they have so many shares, and then it never goes anywhere. Please be sure that you are really doing your research, because if you're not doing your research, you cannot come back to anyone but yourself and say that that's your fault, okay? Please do your research. Please, 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 all right? So anything over $5, we don't consider that a penny stock. If you're a beginner, I would not recommend doing a penny stock, okay? I'll be very honest. I would not recommend doing anything in that sense, or even a sub penny stock. I wouldn't do that. Do something more or less like a blue chip stock, okay? Please, please, please make sure, okay? Let's talk about some of the sectors of this, right? So we've talked about the different types of stocks that there are. Now let's talk about the sectors in which we can more or less get into, right? So for most of us, you could take your daily life and section that off. And certain activities would fit into a certain industry, or as we call it, a sector, okay? So you have the healthcare sector, the oil and gas sector, the electric vehicle sector, the gaming sector, the shopping sector, the technology, et cetera, right? You could just keep going down the list of sectors or industries, right, that these companies fit into. So for me personally, I like to do most of my investing into either technology companies or gas and oil companies, okay? That is what I would recommend, technology and fuel and oil. The only reason why I say that is because your fuel and oil stocks are going up. They're going up like crazy, and you want to make sure that you are catching that bandwagon. Now, I'm not saying go ahead and buy every single gas company out there at their highest point. Please do not do that, okay? Wait for it to come and drop back down and then go from there, okay? You never buy anything from very high up, ever. I don't care what anybody tells you. Just because it's at an all-time high does not mean that you need to go and get involved, because if for some reason the stock decides to fall, you will be in trouble, okay? So please be aware of that. But for me personally, I like the technology sector, Apple, Tesla, Amazon, and some of those are cross industries, but for the most part, everyone would say that Amazon, Tesla, those are technology companies based off of the industry and the things that they're doing. They would consider those technology companies. IBM is a great one to get into right now. I love IBM. You want to be sure that you, again, are doing your research. So what I may like about a stock, you may not necessarily like. Okay, so please be careful with that, and really put together kind of what you would like to see. Okay, so again, knowing these different categories and stuff, it actually helps you. Okay, so knowing the difference between a blue chip and a growth stock, that is very, 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 very important, because when you really start looking into them, you're going to see that there's price differences. Okay, you'll start noticing the price differences, and then you break that down, and you break that down into sectors, and then you'll really start seeing the price differences there. So then you start realizing, okay, well, I can spend X amount of dollars in this company, or I can spend that same amount of money in a different company and get more shares. It's kind of whatever you want to do. Do you want to have more shares, or do you want to have more stable growth? Okay, just be sure that you are that you're looking into that. And then if we have any questions, feel free to drop that. Otherwise, we will go ahead and move on. If we don't have any, which I don't see any, let's move on. So what can stocks do for you? So when it comes to an investment portfolio, you want to be able to diversify it, okay? And with the surge of Bitcoin and cryptocurrencies, it is so important now more than ever to be able to diversify your account, diversify your portfolio. If you're not diversifying your portfolio, you're putting all your eggs in a basket that you shouldn't be doing. Okay, please hear me out on this. Please do not just put all your eggs in stocks. Be sure to have other investments that you're doing, okay? But when it comes to the stock market, you can actually diversify your portfolio even within stocks, okay? So, and here's the great thing too. Stocks are also an amazing way to get kids involved with finances. You can teach them about finances. You can get them involved with what finances are. You can get them involved with what companies are. How do they operate? How does an investment work? And that is really the key to bringing success from our generation to the next generation. We have to be able to show the next generation things that we're learning in real time, okay? In addition, stocks can also lead to some future gains that will help you during your retirement age. IRAs are a great investment tool. It is basically an account that you will make for your stocks that you cannot touch until you are 59.5 years old. So any money that you put in, that's going to be saved for your retirement, and you can buy and sell stocks in there, and it can grow, and it's really, truly a great retirement plan. If you don't have one, feel free to message me later, and I can help you get set up with one. But stocks can lead to excellent gains in terms of retirement. If your company does not, if the company that you're working for does not offer retirement benefits, this would be a great way to kind of subsidize that, right? So, also, the way that the stock market is right now, it's so easy to get involved. We've never had a situation like this ever before. We have apps, we have literally ads running all the time for Robinhood, Webull, Fidelity, TD Ameritrade. There's so many different options for you to get involved with. It's really hard to pass that by. So please make sure that you are going, and even if you just set up an account and you don't put any money into it, at least go and make an account and note the differences between them, because I really do believe stocks can be a way that they can basically fund your life and what you want to do, but you have to be able to go and actually take the first step, okay? So I don't see any questions, comments, concerns yet. If not, we will move on to the next section. I'll give it a second. I don't see any yet. All right, cool. So what are the characteristics of a good stock, right? So I gave you some industries that I think are good. Let me give you some characteristics of good stocks, okay? Let me give you some pointers on what I think some good stocks for you to look into are. So when you're looking at a stock, again, you're going to be doing some research into it. When you're doing these research inquiries, you want to make sure that there are good long-term benefits. And what I mean by long-term benefits, this would be something that comes in the form of a dividend. Okay, a dividend is basically free money that comes from every share that you own, and it's based off of the company's performance. So if the company does very well, they will offer a dividend. They may even increase a dividend. And typically it's not dollars, usually it's cents, because most people buy multiple shares. But for the most part, you can get a decently priced stock and get some pretty good dividends. They have monthly dividends, they have quarterly dividends, they have yearly dividends. So make sure that you have some long-term benefits with a company that you are investing in. Okay. Another good thing is also look for when you're going in, most people will offer their financial statements. Go ahead and look into those and make sure that they have a stable or an increasing amount of income. Okay. You don't want to involve yourself with a company that is going downhill or that's about to declare itself for bankruptcy. You don't want that. So what you want to do is be able to go in and look and see what their financials are, and see if they are doing well for themselves or if they're just kind of going downhill, right? Great example would be Blockbuster. No one thought Blockbuster could ever go out of business. Well, guess what? They did, right? People who were investing their shares in Blockbuster got burned because Blockbuster was doing very well, and then all of a sudden their sales started dropping off. And most people thought, oh, well, it will just rebound. Nothing like that will ever stick. Well, Redbox gave birth to Netflix, and now look at where we are. We don't even go to a store to go watch movies or pick out movies. We have them on Netflix or on Hulu or Disney Plus, okay? None of that was even imaginable. So you want to make sure that you find a company that is making good returns on investments that they have, but also that they have a good income and that they are staying relevant, okay? Please hear me out when I say this. You want to have a company in a sector that is relevant, okay? You don't want to have an irrelevant sector in terms of, like I said, a video store. That was a dying sector, right? And it gave birth to a new one. Now we have Netflix and Hulu and all these other things, but you want to have a sector that is relevant. And then within that relevancy, you want to have a company that is relevant. Because if the company is not relevant within the relevant sector, you're not going to make any money, okay? Or their stock's just going to kind of stay the same. Or they may not even offer any benefits. They may not offer any dividends. You want to make sure, again, that you are doing everything that you can to have the most benefits possible. Okay, you want to have the most benefits possible. Another thing that I personally do is you want to look and see if the company has done a split. So remember at the beginning of this, we talked about splits. You want to make sure that the company is not reverse splitting. You do not want a reverse split. Okay, if the company keeps doing reverse splits, you do not want that. You want a company that is doing splits. Why? Because if you hold on to 200 shares and they split once a year and do a 2-to-1 split, which basically means that you have one share split into two, that means every year you will be increasing your amount of shares every year, okay? Now, not all companies publicly display that information. There are a lot that do. If you are looking into a company and they are showing that they can split, for instance, Coca-Cola, if you would have bought one share, 60 years ago with Coca-Cola, you would have a lot more shares than just one. Okay, they have split several times, and those shares are very expensive. So you would have made a ton of money. So you want to have some, that's what I mean by long-term benefits, okay? That is an excellent characteristic to have. Coke is a prime example of that. They've been around for a long time. They know exactly what they're doing. You want something like that, okay? Trust me. It may sound crazy right now, and you may think, well, I'm not going to find a company like that. I promise you, you will. I have found them. If you need help finding them, please message me, and I will absolutely help you guys find those stocks, because either I've already invested in them or I've already found them and they're on my list of potential companies to get invested with. Okay. Hopefully that clears some of that up with characteristics wise. If we have any questions, feel free to drop those. Again, want to look for long-term benefits in the form of dividends or splits. You want dividends or splits. Okay. Make sure that those companies that you're looking for that do have good dividends and do have good splits, make sure that they are in a relevant sector, meaning they are important. People are using them every day. If you are not doing that, you need to find a new sector. Now, once you find that new sector, find the most relevant company there. Don't find one that is, if you were to rank those companies, don't find the number 100 company. Take the top 10 of that. Look into those, dissect those, see which ones you can get into, and then move forward from there, right? So this is going to be our last section of the day before we close down for this evening and get ready for tomorrow. So lastly, how do I get invested into stocks? How can I do this, right? So you've walked me through some of the characteristics and what are stocks and the stock markets and what to look for. Now I'm wondering, how or where do I look in order to start really going into the stock market? How do I get involved? Okay. So, a popular to contrary belief, I will tell you this: do not get invested in Robinhood. I know it's easy. I know it's easy, and I know it looks so cool and the charts look cool, but I promise you, there have been so many situations where people have been ripped off their money and they lose money because Robinhood will not allow them to do certain things. They will not allow you to buy certain things or sell certain things at certain times. Great example was GameStop or even AMC. Please make sure that you are not investing in Robinhood. If you already are invested in Robinhood, my personal opinion, I would back out immediately. It's not a trustworthy broker anymore. People really thought that it was, but it's not. It's been proven that it's not. There are a lot of lawsuits that are going down in terms of Robinhood. I do not suggest it at all. Okay. That is my personal opinion. Feel free to take that as you will. I would not do it. Now, a good broker to get into would be Fidelity. They offer most of the penny stocks that we talked about. So if you do get to that point where you are feeling comfortable to get involved with penny stocks, you can absolutely do that. They offer most of the penny stocks there. I won't say all, but they do most of them. They also do a lot of the big share of the big companies as well as the little companies. So Fidelity is an excellent option. They do have an app. They don't necessarily have a chart like they do with Robinhood where it shows you the line and your investments and it looks real cool. They don't have that, and it can be sometimes complicated to get into, but I promise you they're not going to screw you over when it comes to your investments, okay? You can also have an IRA set up through them. That's what I do personally. My paycheck goes to my IRA already, and I just have money going in there. And then once I get enough, I buy shares, and that's cool, right? That's what you want. So Fidelity is a good one. Another one is Webull. I have been getting into Webull a lot recently. They also offer paper trading, which is basically like a demo account for the stock. So if you're not quite ready to invest money yet, you can go ahead and do a demo account, and it's great. You can actually set how much money you want to start out with. So if you had $10,000 to invest and you wanted to see what that looks like over the next 6 months, you could take that $10,000 and invest it and see what it does. I personally use Webull for my investments as well as Fidelity. I have my individual account with Webull, and then I have my IRAs and everything else set up through Fidelity. So I personally like both of those. Again, I'm not a huge fan of Robinhood. They've burned too many people. Webull did burn people once, but they did come back and they actually gave people their money back, which was a big thing in my eyes. They gave people their money back and rectified the situation because most brokers don't do that. It's really unfortunate. So be sure that you are checking out your brokerages and checking the forums. There's a lot of forums out there. Go ahead and browse through some of them and see what they say. That's just my personal opinion. And also, Webull gives you more insight into companies. They allow you to see, like I was talking about earlier, those insights, those business analysis, those everything like that. They allow you to see all of those things. So feel free to go through, check that out. I really think those will be good for you if you do want to get involved and you want to be successful. That would be a great thing for you guys to do, is to get involved with Webull and set up an account. And man, it's life-changing. Let's put it that way. So it makes my life a lot easier when I am investing in a stock. And people even have comments on them already. There's some well-known economists that literally use Webull all the time. You can follow them just like you would Facebook, and you can see when they comment on a stock or they give an analysis. It's great. Honestly, for me, it's great. So that's just where I'm at with that. Don't do Robinhood, Fidelity, or Webull, guys. So with that being said, If there's any final comments, questions, concerns, feel free to put those down in the chat. Before we go, what I want to do real quick is, obviously thank you guys for attending day 1. This was great. We will be back for day 2 tomorrow. It's going to be a little bit more in depth. I know this is a lot of information, but we're going to go real good into day 2. We're going to go into, it's not going to be quite advanced, but it's going to be more than what we are today. Okay, we'll review some stuff, and then we'll also dig into some more things. But I really, really, really hope that you guys have taken something away from today. I've personally enjoyed it. Again, this has been 3 months in the making. It's been absolutely insane. So there's really no other announcements that I have other than tomorrow, 1 p.m., we will be live, and I hope that you guys will join us for day 2. If you want to, it'll be just like before. It'll be on the Facebook page, so feel free to just hop on the live and share that and do as you will. Man, that's really all that I've got for you guys, other than to say this. If you guys do want to get involved with our community, or you want to have more information, so for the information part, to learn about who we are, what do we do, course materials, stuff like that. We have several course materials. We're actually developing one for our stocks. We're literally going to be going through and just explaining everything point by point by point. We are in the middle of recording and putting that together for you guys. If you want that, feel free to hop on to learningcurveltp.com. The account there is free. You can literally make a free account and have access to this stuff. We're not charging anyone. This is for free. You guys can go on there, check it out. I think personally, it's pretty good. We're still making some adjustments to the website, so bear with us. We're running through a lot of things right now. There's been a lot of development within the last couple weeks, so we are currently in the middle of building that out. But everything on there is functional. You guys should be able to see everything. But the real treasure is our Facebook community. If you want to get involved with that, you can find that in the groups section of our Facebook page. There's just a couple quick questions on there. Feel free to do that, and you guys can have access to that as well. But other than that, man, I'm super grateful for everyone that came out today. We will see you guys tomorrow. I'm excited. Come prepared, notebooks and pens, and we will see you guys then.